Good day everyone and special teaser. My name is Angelenda M. Malta. My topic is final income taxation. Final tax is one of the exemptions to the scope of the regular income tax. Example, you earn 10,000 in interest from a bank deposit. If this interest is subject to final income tax at rate of 20%, the bank will withhold 2,000, 20% of 10,000. Before giving the remaining 8,000, the 2,000 is your final tax liability on that interest income. You don't need to report it or pay any further tax on it. Features of final income taxation. Final tax. Tax withheld at source. The tax is deducted at the source by the payer. This is the defining feature. So example of final tax. Let's say you earn 10,000 pesos in interest income from a fixed deposit account. So the bank withhold a 20% final tax on interest income. Tax withholding at source. The payer is legally responsible for withholding the tax. Example, Farah earns 100,000 pesos in salary per month. His employer withholds 10% income tax at source. So the gross salary is 100,000. Tax withheld is 10%. Territorial imposition. The tax only applies to income earned within the Philippines. Income from foreign source is taxed under the regular income tax system withheld at source. So, imposes certain passive income and person not engaged in business in the Philippines. So, final withholding tax. What is final withholding tax? Final withholding system. So, final withholding system simplifies tax compliance and reduces administrative burdens for both taxpayers and tax authorities. So the final withholding system imposes on the person making income payments the responsibility to withhold the tax. The tax deducted at source is final. The taxpayer receives the net income, needing no further tax return filing. This system is territorial, applying only to certain passive income earned from sources within the Philippines. Taxation is territorial. Tax obligation cannot be imposed on non-residents for income from foreign sources. Therefore, all income earned from sources abroad is subject to the regular income tax. Rationale for income taxation. The rationale for final income taxation is rooted in convenience for both the taxpayer and the government. The system eliminates the need for taxpayer to file an income tax return, simplifying compliance, particularly for those facing distant time or cost barriers. For the government, this final withholding system is the most efficient method for collecting taxes on income where non-compliance or tax evasion is a high risk. Example of rationale for incoming taxation. A government imposes a progressive income tax to redistribute wealth, ensuring everyone contributes to the system based on their ability to pay. So this revenue enables the government to provide vital services, promoting economic growth, social stability, and individuals' well-being. Passive income. Passive income is income earned with very minimal involvement from the taxpayer and is generally irregular in timing and amount. It's contrasted with active income, which requires more direct and consistent effort. The text does not give examples of specific passive income streams. Example of passive income. You own a rental property and collect 50,000 per month in rent. After paying for expenses like mortgage, maintenance, and taxes, you left 20%. Example of passive income. You own a rental property and collect 50,000 per month in rent. After paying for expenses like mortgage, maintenance, and taxes, you left 20,000 per month in net rental income. So the 20,000 monthly rental income is considered passive income because you're not actively working for it. Another example is online business or courses that generate sales without direct effort. Non-resident person not engaged in business in the Philippines. So non-resident person not engaged in the trade or business in the Philippines, such as non-resident aliens not engaged in trade or business, NRA net, and non-resident foreign corporation, NRFCS, have a high risk of non-compliance. These taxpayers do not have offices or fixed places of business in the Philippines, making tax compliance very unlikely due to their absence and distance from the Philippines. Also, the Philippine government cannot impose upon them the obligation to file a return due to territorial consideration. Example of non-resident person that engaged in business in the Philippines is John is a Filipino citizen who works as a software engineer in Singapore. So, he earns a salary from his employer in Singapore and does not have any business operations or income generating activities in the Philippines. So John is considered a non-resident person and not engaged in business in the Philippines because he is not resident of the Philippines and he lives and works in Singapore. Passive income subject to final tax. So interest or yield from bank deposit or deposit substitutes. You put money in a saving account, the bank pays you a little extra money interest for letting them use your money. This is passive because you don't have to do anything extra to earn interest. So example of passive income subject to final tax is you have a 1 million time deposit in a Philippine bank. So the income is taxed at a fixed rate and the tax is withheld at source. The taxpayers does not need to report this income or pay additional tax on it their tax return. So example, you have a 1 million time deposit in a Philippine bank. So the earning is 50,000 in interest income per year. So the bank withholds 20% final tax on the interest income. So the interest income is 50,000. The final tax rate is 20%. So final tax withheld is 10,000. So 50,000 times 20% is equivalent to so the 10,000 is multiply 50,000 times 20% is equivalent to 10% at 10,000. So 10,000 is the final tax withheld. Passive income subject to final tax. So share in the net income of a business partnership, taxable association, joint ventures, joint accounts or co-ownerships. Royalties in general. Prices exceeding. So passive income to final tax. Winnings, informer stock rewards, interest income on tax-free corporate covenant bonds. Final tax on individual and corporation. Number 1 is non-resident aliens not engaged in trade or business. Example of non-resident aliens not engaged in trade or business. Example, Maria is a citizen of the United States and lives in New York. She owns a condominium in Manila, Philippines. So, Maria considered a non-resident alien not engaged in trade or business in the Philippines because she's not a resident in the Philippines. This is the interest income or yield. So, on interest income from banks, short-term deposit certificate, long-term deposit certificate. So, individuals 20%, then exempt, recipient, corporation 20% RIT.